Hello everyone, this is Sawcruhteez Streamz and I am Sawcruhteez. Today we are doing a bit of a test stream to see if the live stream is going to be working a little bit better for me now. Kind of keeping an eye on the screen here out of my right eye just to see how things are going. Last time I did a live stream it was lagging so bad that nobody could even watch it, so I've been spending hours to try to figure out what might be the issue, and I am crossing my fingers that we got it figured out, because if it's not today, it'll probably be another week or more. Who knows? So we'll be crossing my fingers that today works, and if so, we will get right into a full show. There will be plenty to talk about. I've got a number of things written down. If it doesn't work out as I am hoping, like it hasn't the last couple times, then I'll just end up closing down the stream, deleting this video, and doing a pre-recording and getting that uploaded as soon as possible. So with all that being said, keeping my eye on the chat, and so far so good. Still holding my breath. The last couple did work okay for a little bit, so I'm just going to hope that it's going to work today, and we will dive on in and let's see what we got here. If this stops working, then I will just be trying my best to keep an eye on the live chat. Until then, let's go ahead and see what the charts are looking like. So yesterday we got some really neat action. Basically right after I ended the stream, we were looking at the weekly close, and this candle right here happened basically right after I ended up, it wasn't a stream yesterday, it was a recording, so I was uploading the video while I was watching this action happening, and that definitely motivated me to get back into the live arena, because there's nothing more fun than analyzing price action as it's really moving, in real time. So this was definitely a very, very interesting candle. I think I was looking at, as this closed right around here, I was looking at wanting resistance to hold around 10,175, and within minutes we're up at like 10,800. I mean, it was just amazing. Let's go ahead and zoom in just to see if that really was just within minutes. So yeah, within, let's say, 30 minutes, even say 20 minutes, it goes from 10,131 up to 10,800. Now that is some sweet action, and that is the type of action that can really hurt both sides of the trade, in terms of, if you're short, then a lot of people are going to be setting their stop losses above either 10,200 or 10,400, or if they're conservative, going 10,475. Based on these horizontals, that's going to be very likely stop losses for a lot of people, and this candle wiped all of those out. And that's why this moved so hard so fast, for the most part, is because it was liquidating a lot of big positions. Shortly after ending the stream yesterday, I saw a $9 million liquidation happen on BitMEX. We were kind of looking at the order book to see if we could get a read there, and then boom, saw a $9 million liquidation, which is one of the biggest I've seen in real time in quite some time. So as that liquidation was trying to cover itself, others were getting liquidated, and it's just kind of a cascade where it just doesn't take any time at all for the price to shoot up. And when that happens, you got to keep an eye out for a retrace. A move based on liquidations is generally not a sustainable move. If this move was just all due to shorts getting squeezed out, then we really expect this to drift right back down. Looking in hindsight, that's a lot easier to say than when it was looking like this, which looks like a very, very bullish sort of consolidation following a big move. But by knowing that a lot of this was short squeezes and liquidations, it gives us reason to be concerned about the sustainability of this move. And any time that something like this happens, sorry about that, pipe down, declined, okay. Phone on vibrate, should be good to go. Okay, where was I? God damn it, I'm sorry about that. Okay, so even on the other side, say about the bulls, a lot of bulls are probably waiting to buy this breakout. So that is what you kind of want to, at least for me, I'm always liking to kind of think about how much of this is buying pressure from bulls buying a breakout and how much of it is just liquidations, whale games happening, somebody coming in and jacking the price up to go ahead and sell once it gets up here and those positions start to kind of get liquidated. So kind of asking yourself, in both situations, I think people are getting hurt. The people that bought this breakout, I don't think if they're still in the position, they're probably not happy, and a lot of them may have already exited depending on what time frame they trade. And then everybody that's shorting got hurt here, and most people that were shorting, not including myself unfortunately just yet, got hurt right here. So this is the type of action that I really have grown to expect following or preceding weekly closes. When you get a big candle close, and even monthly closes, quarterly closes, the bigger the close, the more this type of stuff happens. And then daily closes, it also absolutely happens on maybe a little bit smaller of a scale, where when you're coming into a close, there's a lot of people waiting for that close, and they're waiting to maybe see that very next little bit of confirmation before entering their position. And I'm just so used to seeing the first move after the weekly close being in the opposite direction of that next move. And that's kind of what I was trying to describe yesterday. I don't know if I did a good job or not, but essentially we got the weekly close here, and then it's very common that you will get a sharp reaction to the upside before continuing down. And the reason why that happens is because a lot of liquidity comes in around big candle closes, and the more liquidity that's coming in, the more people that have money that are needing to get separated from their money. So when you've got a lot of liquidity coming in, then there's going to be a lot more traps that are common to really, just make it very difficult for people who are waiting for those sort of higher time frame confirmations and then being a little bit weak-handed over the next few hours or days. Because if you're trading a weekly candle, you really shouldn't care what happens on Monday or Tuesday or Wednesday. That shouldn't be that big of a deal. What matters is where the candle closes. So the people who are maybe selling this weekly close and then getting freaked out early in the week based on this action, very common and very much indicates somebody who is maybe a little bit more weak-handed than they should be, in the sense that they're not looking at the broader picture. If they're trading the weekly candle and then they're exiting their position very shortly thereafter, within a couple days, not even waiting for that next weekly close, that's a problem. That would definitely be a problem, and that is a problem that is very prevalent and one that the market takes advantage of time and time and time again. And that's why I was watching this with the eye of a hawk, but I wasn't necessarily getting too concerned right away. Something else that I believe that I reiterated yesterday was how you need to wait for a couple hours after that close. Give it a couple hours for those shakeouts to occur, and then see what happens. See if there's any follow through. See, what happens with the moving averages. See how the closes are, because when those really weird reactions happen near closes, they only tend to last a couple hours. In my experience, there's usually really, really weird moves in the hours preceding and following major candle closes. So it would have been neat to be able to kind of track this as it was going, but that didn't happen. And the reason why I was not too scared is what I just lined out, but primarily it's the number one tool that I use when I trade, and that's these moving averages, the 50 and the 200 EMAs. The further that these get spread apart, the more likely they are to act as resistance, and the harder it will be for price to break above and stay above. Not saying it's impossible, just saying that the further these are spread apart, the harder that is for it to happen. So as this was really rallying through up to almost my alarm point at 11,000, if we were taking that out, now I'm really starting to kind of worry. But in real time, I'm looking at these moving averages and being, man, these are just too spread apart for this to really take off and continue in my opinion, it would at least need to kind of consolidate around 10.6 to 10.8 for days. And that would allow me to go ahead and get out of my position while these moving averages posture for a golden crossover. Take a drink of water and look and see. Looks like the stream's still doing good. All right. Excellent. And seeing Business of Vintage in the chat. Wanted to give shout out there. She was a big help to help me troubleshooting some different things. I wasn't sure if this may be the issue or may not. She spent a lot of time going through literally a spreadsheet with probably 15 different lines about could it be this, could it be that, could it be this. So thank you very, very, very much. That just knowing that it wasn't my incompetence in some areas was a big help for me to kind of go ahead and at least try it out today. So again, thank you very much, Business of Vintage. Also just hopped off a call with another viewer's husband who, not sure if he wants me to mention her name, but he was definitely a big help as well. It might not have felt like it, but it certainly was him, again, helping me to realize that maybe this area wasn't due to me, and I can go ahead and try it again. So thank you everyone for the support and offers to help, as well as the kind words. So let's go ahead and get back into these charts, because this is a fascinating candle. When's the last time you've seen a candle with this big of a wick on the 4 hour? I mean, please, somebody find that for me, because I don't know where it is. It's out there somewhere, but I don't know. There we go. There's a nice wick. And notice how nice wick on the bottom, what that led to afterwards. At first, it kind of came and re-explored the wick. So that is an area where I used to pay a lot of attention to this and haven't as much anymore. But when I'd get a long wick, what I'd look for is to enter when the price re-explored the wick, because in my experience, it provides really good risk reward in terms of you get this long wick, which is bullish, even though this is a bearish candle. I would view this as a very bullish wick. So now if the price falls back into this wick, we buy inside this wick and set our stop loss below the bottom of the wick. And that's an entry that I call re-exploring the wick. And that's definitely something that I look for when we get significant wicks. Let's see kind of what's happening in here. We do come up and re-explore. Now we've turned around, but watch out for this guy. I mean, this is very, very interesting. But we do see that we have a kind of similar sort of inverse here, where we've got this green body, bearish wick, re-explored to the upside. Selling right in here would have made a lot of sense to me if I was really just fully focused on actively trading all day and all night. Then I would have been looking at, okay, we've got resistance from the 200 EMA. We've got resistance from the horizontal right here. And then we have a really favorable risk reward in terms of if this top of this wick does get taken out, that's going to be less than a 5% risk. The reward to the downside I would estimate as at least 4 times that, but that is just an estimate. And so that does just kind of illustrate kind of how I like to potentially trade some of these longer wicks. We see that right back in here, you get the kind of same action. I wouldn't have been at all interested in that. Need a much bigger wick. And if you get a nice wick coming off of support, that isn't one, but something like this, that I could have been interested in for that entry. If we get this nice wick coming off support and then we come back and re-explore it just for a little bit, or however long, buying inside this wick and setting a stop down there, that is a good risk reward. The strike rate, I haven't done enough back testing to really be sure one way or the other. But let's go ahead and zoom into something else I was looking at yesterday as this candle was happening, and I was absolutely not feeling super comfortable, not feeling super uncomfortable, but wanting to analyze this as closely as possible to see, just exactly what I thought was most likely moving forward. And this close was huge for the bears as far as I'm concerned, because we closed not only below this high, but we closed, I thought we closed below that horizontal. I must be mistaken. But we did close below this 50 EMA. So it reacted all the way back down below this 50 EMA. And remember something else that I say, and that's moving price above moving averages in a bearish crossover is a sell signal. If you have a bearish crossover and price above it, that's a sell signal. And what do we have here? Price above the moving averages in a bearish crossover, much better sell signal here due to the spread. This was very much in danger of reversing, whereas this was not nearly as much in danger of reversing, at least in the next couple days, due to how long it would take these to converge and eventually cross, which something that I believe in. Maybe you don't, maybe you do. I don't want to try to convince anybody of anything, just talking about how I view things. And this is a super interesting candle that came all the way down here and now is regained bullish. It's now green, back above the 50 EMA, and this thing was rolling over so nicely that this is surprising me, and it will be very interesting to see how this closes. And you guys have been kind of listening to me talk a little bit about these like Williams fractals over the last couple days in terms of how good they can be at identifying areas of reversal, and this looks very much like a Williams fractal. And to be honest, I would, in my mind, it is, just because crypto's so crazy that weird stuff happens that sometimes I just kind of discount it, because this is the perfect kind of setup where it's that rolling over. You've got the high, the lower high, the lower high, the lower high. The only reason this isn't a Williams fractal right here is because this candle is above this high right here. So that means that that guy isn't, but this guy is. And I much prefer considering this as the fractal. This is the horizontal resistance. This is where we're starting to roll over. This was a real freak show that happened for an hour or two, and for me, putting the fractal up here makes a lot less sense than just considering this as that area. And that is important to me because this is coming on a lower high from here. Like, some may look at this and say, oh, well, the price got higher than here. And I say, no, I don't buy it. This was weird. This wasn't very organic. I would need to see this be proven to me before I would really believe that. And therefore, I'm looking at this rolling over action occurring right here, which is right below that guy. So that is kind of what I am looking at and thinking that this candle, gosh dang it. These things are hard to delete because why? Okay, there we go. All right, so I was going to say, yeah, so this candle is actually very important. I would not want this candle to get above this candle. The candle that we're currently on, seeing that just turn green and rally from 10,100 in a couple hours, or maybe even less than, was starting to make me kind of wonder about my read. And if we were able to break above this candle here, just the prior 4-hour candle, then that would make me think that I'm off about this, because this rolling over, it should continue with lower high, lower high, lower high, lower high. That's really what I want to see. And if this does get back above this just prior candle, that would be very significant to me. So doing what I said we'd do and zooming in, stream is still working. I can't tell you how happy this makes me after all the hours I tried to get it to work. So hopefully I don't jinx myself. All right, taking a look at what I did yesterday after that pump happened. And so for me, the 0.5 and 0.618 Fibonacci's are very, very important levels that I pay close attention to, basically on all time frames. So I'm connecting the peak of that move down to kind of the bottom. And you could use this wick, but that was kind of a Darth Maul candle, another situation where it's like just kind of one of those crypto things where I think that this is the better area to use. That's the horizontal support. I prefer that than this wick, but you, to each their own. So what I was looking at, like I kind of said earlier, when we saw this, I'm kind of going, holy cow, what if this is a bull flag and we're getting ready to have another $800 move, which smashes us right through 11,100, which is my very important area of resistance. So I'm looking at this like, definitely wondering what in the heck is going to happen. So that's when I draw the fib, and we notice that the green is the 618 and the teal is the 0.5. So once it retraced below let me start another way. As long as it was above 0.5, I was thinking that I've got to be very prepared for another move to the upside, and even think that that's the most likely. If you get a big move and then you fail to retrace below 0.5 and you consolidate, then you could have a bit of a bull flag pattern, or a pennant, or there could be, I'm trying to think of another option that you would have, and I think those are pretty much the two in terms of a big move and then a pullback that supports above 0.15. That I think is going to be your options. And if it does retrace below 0.05, that is very, very important to me. I wouldn't expect price to retrace the 0.5 Fibonacci if it's going to continue to the upside. That's just my experience. I think that that's something that can be very powerful. Let's see here. Let's get that just kind of moved over, because and I'm not even sure what to quote or where to say I got this from, but I didn't make it up, and it is very powerful in my experience that if we can maintain support above 0.5 and especially 0.618, then it is very, very much primed for continuation to the upside. Whereas if we retrace below that 50%, I'm starting to think this whole move is going to get retraced. And then now we kind of see that at each level has been very significant support. So this has been a good thing to be watching, and something that you could have drawn in real time as soon as basically this kind of started to pull back a little bit, and you became pretty confident that was the peak. You connect the peak to the bottom, and now we see that it tried to kind of find some support there, and for about an hour that did look like it might happen, but then as soon as that candle broke below, it hasn't been able to get back above the 0.5. Then notice how this did fall below the 0.382, closed above. We then ranged between those, and now this was kind of the action that I was not necessarily wanting to see. I wanted to kind of see just a ladder down in terms of we consolidate here, now we ladder down here, now let's consolidate 0.236 and 0.382. Let's consolidate that and then ladder down again. That's what I want to see, and maybe this is just some sort of little head fake before that does end up happening, but I don't like seeing those head fakes above Fibonacci's. We noticed that back in here, none of these head fakes could close above the Fibonacci's. Getting wicks above, sure, love it, absolutely. That's a great signal. Actually, if you wick above and you can't close above, you expect more to the down. Whereas here we closed above, and now let's see if this retraces. And this is what's kind of neat is with the Fibonacci's is it's like a fractal in terms of every single time frame. You can use this same sort of philosophy in terms of, am I wondering if this is a little head fake or is this a real move? If I was really trading small time frames and focusing all my efforts on trading, I might be coming in here and doing something like this and saying, okay, as long as, and maybe I would probably want to use this right here. That would make more sense to me. Say, okay, as long as this candle can stay above the 0.5, then it looks like this is a real move back above this boundary. But if it does get back to the 0.5 or below, then we can be pretty confident that this was just a little bit of a head fake. So that is what's really cool about Fibonacci's, is that same sort of process that I went through right here. You can basically do that on every time frame, and it is very, very powerful. Give a shout out to my friend Fibo Swanee on Twitter. He is one of the best at fibs that I've come across, maybe the best. I mean, you should see the charts that he has with something like this. May have 50 different fibs on. I mean, he is good. Like he makes really good calls. It's one thing to draw complicated charts. It's another to consistently make good calls. So shout out to Fibo there. Definitely he has inspired me to start using those a little bit more. And okay, very happy to see the chat is that the stream's still going. I haven't really been Looking at the chat as much as I would like, we get a question: why do you use BitMEX chart, which is not that indicator? Why do you use BitMEX chart, which is not that accurate? Sorry about that. In my opinion, BitMEX is the default exchange that I want to use because it's the highest volume exchange by far. I mean, 75% plus of the volume in specifically Bitcoin and Ethereum, specifically Bitcoin, is on BitMEX. So when I'm tracking Bitcoin, I want to use the highest volume exchange because I believe that the highest volume exchanges are going to be the most accurate. So that's answer to that. There was another good question earlier in terms of, let me see if I can find that real quick. We say, question, do indicators work because there's something fundamental, math, psychology, about them, or just because traders use them and it is self-fulfilling prophecy? That's a great question. I typed something in the chat, but I definitely think that that is something I can talk about here. I think it's both, and every indicator is a little bit different. So in terms of hyperwave, that is psychology. That is mainly people getting over enthusiastic towards the top and getting overly depressed towards the bottom. Whether you want to call it hyperwave or a bubble, I call it hyperwave because that's the actual indicator that I would use to trade a bubble. And that is based primarily on human emotion. And that is basically the foundation of technical analysis, is that human emotion drives price opposed to other underlying fundamental reasons. I believe that fully, so I have no problem using indicators that try to capitalize on emotion, but my favorite indicators are ones that are based on math, because they're indisputable and they're basically, it tells me that if I'm thinking that I think one thing, but the math is telling me another thing, well, I trust in the math. And that's why I love the moving averages and parabolic SARs. Those are based entirely on math, 100% math based. And the moving averages, that's something that can be now that I'm thinking about it, if you are using a kind of an emotional sort of technique, which maybe could be considered a number of other ways that I don't really want to throw out anything without thinking about it. But if you are kind of using some sort of pattern that may be self-fulfilling or maybe is based on emotion more than anything else, well, that's where it's a really, really good idea to complement that with a math-based indicator for your backup plan. And Tyler Jenks showed us beautifully in real time how that is done. He was expecting much lower prices in Bitcoin, as was I, but both of us had a backup plan. We weren't willing to try to catch knives and buy the bottom unless it absolutely lined up perfectly at the exact prices that we were willing to risk our hard-earned money. But we were also going to be using math-based indicators to go ahead and signal backup entries. I have a little bit different approach than him, and you guys can go back and, if you're interested, look at the videos we put together as the price was racing through 6,000 to 7,500. Get a feel for where and why Tyler decided to go ahead and buy in, and that was entirely based on math. And it was as simple as the long-term moving average turned up, and therefore the long-term trend is mathematically bullish. Over X amount of periods, the price has gone up, so the trend is bullish, so I buy. And he did very well. He bought around 65 and held that for a while. So that is just another good question. I'll do my best to get to these, but I do have a lot to talk about today, so I don't want to take up too much. And that angle of the moving average is a great segue into what I'm wanting to look at next. Just a great chart shared with me on Twitter by user at GrahamGivens4, GrahamGivens4. He showed me this 3-day chart with the 200 period moving average, and after thinking about it, I have never seen anything like this, and would love for if anybody else can kind of share some insight or potentially some other sort of examples of where this might be happening. So here we will just go with a longer time frame chart. What I want to show you guys is look at the angle of the 200 period simple moving average on the 3-day chart. This is boggling my mind. And I know what the explanation is, but I just don't think I've ever seen it before. So here we have the 3-day chart telling us that we are in a bear market since since the end of July, based on this 200 moving average angled down, trending down, telling us prices moving down over 200 periods of the 3-day chart. And notice how we had a sharp spike up after that, but it didn't even affect this moving average. And this is a great example of why it's so important to go through the tedious process of calculating moving averages by hand for yourself. It sounds stupid and it sounds silly, and when Tyler told me to do this, I didn't think I was going to get anything out of it, but I was sure going to do it because, you know, he was telling me to. And what I found was kind of what we're seeing here, and I was amazed by how you can get some big moves that do not even affect these long-term moving averages in the slightest. I mean, this price moved from 96 up to 12,300, and the moving average didn't even flinch. It didn't even flinch. It kept moving down. So that is something when you go through, if you go through and calculate these by hand and you think, holy cow, this candle here should have a big impact. This moving average should really start maybe trending up even more after these huge moves here. Then you see it just stays the same, and it's like, wow. So that really helps you to realize, like when I was watching the 4-hour chart yesterday and seeing that big candle occur, and just knowing that because I've calculated moving averages by hand, I just know that that one big candle, that isn't going to affect a 200 period moving average that much. Even though it's the 4-hour, it's still a 200 period moving average, and one candle just simply cannot affect a 200 period moving average much at all. And to believe that, you really have to go through and analyze, calculate these by hand for yourself. Get some graph paper. It's not hard. It's a basic algebra. And then you label the X and Y axis, and then you just start, 400 periods back or whatever, and start drawing in the candles. That's how people used to have to chart. And that's where real insight comes. The people that had, like Wells Wilder and Tyler Jenks and on down the line, the people that have really had major insights into technical analysis, I firmly believe that a big part of that came from the tedious work that they had to do of actually hand drawing in candles, actually hand drawing in moving averages, hand drawing in the TD sequential. Doing that makes you understand the indicator so much better that you can then maybe start to add some input of your own. So a little bit of a tangent there, but I couldn't reiterate how important it is to any indicator that you use, calculate that by hand. That's how we figured out the parabolic SAR was wrong. Somebody brought some to our attention, and the only way we could figure out what was going on is calculating that by hand. So that's some really, really valuable experience that I'm very, very glad Tyler hammered that home to me. Reason why I think this is so weird right here and why I've never seen this before, why it doesn't make any sense, is because the daily is super bullish as could be, and the weekly is as bullish as could be. Having a 3-day have a significantly bearish turnover. This isn't just a small little turnover. Remember, 1 or 2 candles can't do much. When you have a rollover like this, that isn't small. That's significant. So I never expect to see a middling time frame roll over before the lower time frame. That's just crazy to me. So here we see that the weekly, we're angled up. We're bullish for sure, and it's starting to increase its angle. It's starting to become more bullish from back in here. And then the daily is very, very, very bullish. I mean, that's as bullish as it can really get. That is really as bullish as it can get. So having a daily bullish, a 3-day bearish, and a weekly bullish is just something that I've never seen. It should, like, generally the lower time frame should signal first. Like if the 4-hour, if we're going to get a 250 EMA crossover on the 4-hour chart, well, you would expect that to occur on lower time frames before it occurs on the higher time frame. So see, we're wondering, maybe is this going to get a bullish cross eventually? Well, we might zoom in and see, because if this does, every time that I've seen it, it's happened before on the lower time frames than it does on the higher time frames. So 2 hours still looking good. We zoom into the 1 hour. We see, okay, now the 1 hour is getting real close. If this does get a bullish cross here, that could be very much an indicator that the higher time frames could be following. So if the 1 hour is getting ready to, we assume that the 30-minute probably already did. Sure enough. And then now we see this. Now we wonder, oh, is the 30-minute getting ready to recross bearish? Now let's zoom into the 15-minute to see if it already did. Nope, but it looks like a little closer. Let's go ahead and zoom into the 5, and sure enough, it already did. So now maybe we expect the higher time frames to follow, which tells us maybe the 1 hour won't get the bullish cross. So that's how I look at the higher time frames. Seeing if we were to see here where it's like the 1 hour is the 1 hour is bearish, the 2 hour is bullish, and the 4 hour is bearish. That's just like, my mind just can't even start to think about that. So that's something that I think it's an oddity that is explained by how far back the 3-day chart is going. Essentially, the 3-day chart would be, let's go back to BitMEX. We can see exactly where it's starting. So the SMA. Okay, so we see that it's starting right here. So now it's starting to take into account all of this action, and this is turning down. That is just blowing my mind. I'm going to have to think about that some more, and I might even have to calculate that by hand just to prove to myself that this is possible, and there's definitely something to be learned there, and I'm not sure what it is yet, but it's a great chart, and thank you very much for sharing that, Graham Givers 4. Last thing I want to look at, we did have somebody request the Copic curve. I did say last thing, but I might be lying, and I'm having so much fun. This might go a little bit long today. I'm just so stoked that it's working. Okay, so not much to say about the Copic curve other than it looks like it did a hell of a job calling the top. As it stands right now, this could be considered bullish. If the Copic is able to pull back and come back to, like, kind of revert to the mean and come back to an area where it isn't overbought, but the price stays flat, that could be considered bullish. Think of it like an RSI in terms of if the RSI gets way overbought and then it pulls back to 50, stays above 50, and the price doesn't really pull back itself, that's very bullish action. So potentially that could be what we're seeing here. There's still so much room for it to go from 100 all the way down to the 0 area that I wouldn't really be reading much into this, because I mean, in 1 week or 2 weeks we could get down to my target areas, and there's plenty of room in that Copic curve for that to happen. Let's see here, the ADX on the weekly basis also looks like it's doing a good job identifying a top rolling over there at resistance, kind of like we did back in here. Not thinking that it's going to be a full-on top, I'm just thinking it's a local top, and we need room to consolidate and cool off before the next leg up. So while we're on it, we might as well just look at some SARs. They haven't started to accelerate at all, and we wouldn't expect that to happen until a new extreme point is made. So a new extreme point would be a new lowest low in this trend. Current lowest low is, let's call it 9,100. If we break below that, we would get a new extreme point that would increase the acceleration factor in the parabolic SAR. Again, this is stuff that ideally you guys would learn for yourself, and that's what you see in here is this is the acceleration factor. It starts at 0.02. Every time a new extreme point is created, it is increased by 0.02, and it maxes out at 0.2. So right now we are at the minimum. We've only had one extreme point, and if we do take out that extreme point, we will get to a 0.04 acceleration factor, excuse me. Curious about the daily SAR. Yeah, that could be very powerful. I would not want that to get broken. definitely like seeing that holding strong throughout this last action and starting to come in. I'm liking that. That shows resistance coming down and support is holding on. So that's why I want to see resistance hold for sure. And might as well just throw on that 4-hour. We did go ahead and break through that. No surprise there. So watch for this one to break down. But it's really not going to work too well. We're trapped in a range, and SARs are for trending markets, and being in a range, you really don't need to look for trending indicators. So for right now, what I would say is to just basically set an alert at like 10,440 and 9,800 or so. This is where we're stuck in, and unless you are the type of person that likes to trade ranges, which there are people out there that's all they trade, is just flat ranges. They buy support and sell resistance. That's not me. I'm a trend trader. So because of that, I want to wait until the price gets out of this godforsaken range. And this is a range that's very easy to identify. I'd probably move that up a little bit. And basically, watching charts while you're trapped in a range is just going to drive you crazy. There's just don't do it. It's not going to be any help. Just set yourself an alert and wait for that to trigger. And then don't freak out if this alert triggers the downside. Don't, instantly freak out and enter. Wait to see what happens, kind of like we did up here. Give it a couple hours. Anytime you feel like you don't have a couple hours, you can't wait a couple hours before the next entry, you're making a bad entry. I can guarantee you that. If you don't feel like you can give it a couple hours, unless you're like trading the 1-minute chart, if you don't think you can give it a couple hours, then you're making a bad entry. So next time where you're coming in and you're looking at buying or selling, and you're really feeling like, I need to do this right now. If I don't do this in the next hour, then I'm totally going to miss out. When you're feeling like that, close down the computer and leave the house for an hour, and then just come back. That is a trick that has saved me more money than I can tell you. And then once you get into that habit of, now you can recognize this feeling of, ooh, man, this isn't how I should be entering, feeling like this. Once you can really get good at recognizing that feeling, then you can really kind of give yourself an edge. All right, what else do we got? Ooh, my favorite chart of the day. I think I saved the best for last. Well, the last one isn't the best, but it's in a traditional market, so we'll go ahead and do this one. Bitcoin market cap dominance. Look at this flag. Ooh, boy. I think it's going to 75% this week. That is what I would be willing to call anyways, and I am positioned accordingly, being short ETH against BTC. If Bitcoin gains in the market cap dominance, I will bet my bottom dollar that it will gain against ETH. So shorting ETH against Bitcoin in expectation of this to go to 75 is very valid in my opinion. So let's see why I would give it a 75 target. We measure that pole, say that it breaks out right there. Go ahead and zoom out. And, oh boy, 76. So, and then we kind of see, is there confluence maybe from horizontals? What do you know? So this is a great looking chart to me. Like I said, my favorite chart of the day. We see that this thing has been rallying hard. So let's kind of look at the fibs that we were talking about last time. So let's see that this move here. Nope, did it the wrong way again. I'm an expert at that. So I guess we'll do two different ways. We'll first look at this move here. From here to here, and notice, look at how it found support perfectly at that 0.618. And that's what's amazing. These assets that aren't even tradable tend to follow technical analysis better than anything else. I mean, it's just mind-boggling how well some of these charts follow technical analysis when there's nobody trading. And that is basically case in point for me that a lot of these math-based indicators, which this is the definition of a math-based indicator, are not just self-fulfilling prophecies, because there's nobody in here buying this chart right here. It's just naturally, that's how the natural market cycles is going. Fascinating. And then it continued to the upside. Now let's look at the next one. I would use the whole move here and draw it upside down like I do. And this one found support well above this 0.618. Very, very bullish. Now let's see what we got here. Kind of talking about that bull flag pattern where you have a nice rally, you pull back, you want to see it consolidate above 0.618, or ideally 0.618. And for me, I definitely want to see it stay above 0.5. So now again, look at how well these fibs are respected. It's unbelievable. You can draw these in real time, you know, just based on once you get this high and this engulfing candle, I'd say, okay, this is the peak, this is where we started, let's draw a fib. And then look, you come back and you wick below 0.618, but you sure don't close below, and you don't even wick below 0.5. And then from there, you get two more touch points of the 0.618. And now this is just an ideal setup as far as I'm concerned. So definitely we'll be looking for 70% market cap dominance before the end of the week. One other thing I was kind of looking at, let's take a look at a potential pitchfork for this action that we've been seeing. Maybe we do something like that. That looks pretty good. We see how the median is definitely being respected. Not so much. I would more like some of these to be catching the median. Doesn't happen. This one's nice how it comes off of that level there. So these green areas have been very, very much indicating support and resistance. And this median is probably something to pay attention to as well. So notice that we're supporting on this green pitchfork, and again, this is a Fibonacci pitchfork, so we're getting the Fibonacci relationship not only in that retracement, but also in the pitchfork here and here and here. So this is very, very much looking like it is ready to break to the upside. And let's see here. That's everything I wanted to go over. Let's take a quick look at ETH before moving on. S&P, look out for this incoming death cross. My stop losses were set right below here. So I'm very happy to see that that hasn't been taken out yet. But the longer we stay down here, the more that this death cross is imminent. So like we come down here, we've got a spread. We think, okay, we got to at least consolidate. Okay, well, shoot, now we're consolidating and not going anywhere. If this right here, this was very much looking like a great buy signal because we got the double bottom, we got price below the EMAs with the bullish crossover. But then it just failed to go anywhere. I was looking at a big W pattern here that never confirmed, retraced hard. So definitely going to be watching this closely. If these get a crossover here, I'm out. I'm not going to be waiting for this to exit, and I'll probably be entering short. So I wasn't planning on looking at that, but that is something to pay attention to. ETH USD moving forward. We do have a potential for a death cross. Let's pull up another chart that isn't so stinking messy. We'll try Bitstamp here. Okay. Oh, dang it, I just deleted my 50 EMA. Okay. So, just going to get my 50 EMA back on the chart because that is what we're needing. Make that a little thicker, and there we go. All right. And what's this guy? Get this guy out of here. Okay. Well, look at what we got here. I mean, this is about as good of a sell setup as I am used to seeing. I'm trying to bite my tongue. I don't want to be overly excited about anything, but I mean, shoot, look at this thing. You know, so we fall below. We've got a spread in the EMAs that kind of act as our magnet and forces us to either consolidate or bounce hard. And instead of bouncing hard, we're consolidating. And we're not only consolidating, we're consolidating below the EMAs, and now it's going to be quite difficult to avoid this crossover. And with how close the price is to where this is crossing over, and how it's also with horizontal resistance there, and how it's also following a bear flag breakdown here, it's just one of those setups where sometimes all the boxes are getting checked. So definitely keep an eye out on ETH USD. It looks ready for a tumble. Here is the line that I would be looking at in terms of breaking down. That would be very much indicative of this head and shoulders breaking down, and that death cross really kind of doing what it's going to do. And here's a good example of where we did. So we fall below, we consolidate, but we don't get the death cross until price really moves in a big way. So notice how that is not something you want to be selling. When that does happen, then you still want to wait for a retest of that 200 EMA. Wait for consolidation. Here, that's not really what we're seeing at all on the daily. We are consolidating very close to the cross, under resistance, and the last hope is this trend line as far as I'm concerned. I have been short ETH USD for a little bit now, and am also been short ETH BTC, which has been working out much better for me. Had somebody ask where I short ETH BTC. I'm not recommending anywhere. And as a matter of fact, this could be a good segue into something I was wanting to hype up in terms of I will be looking to promote some affiliate links for BitMEX. I do trade on BitMEX. I really trust BitMEX. I am comfortable recommending them. So moving forward, I am planning on putting together a tutorial series for how to basically trade on BitMEX, how to use all the orders, how to, just understand the funding rates and the different futures that are going on, and then also just a tutorial for shorting. Did have a request for that. So I will be going through a tutorial for how I trade on BitMEX, and then also how I use it to short. And I do short ETH BTC on BitMEX. That is a option. You can short ETH BTC on BitMEX using the future. If you're using the perpetual contract, it's ETH USD. If you're using the future, it is ETH BTC. So that is one thing that I will definitely be covering in that tutorial, because that's a little bit complicated. So don't really need to clean up this chart because it's already looking so good. It's just been bear flag after bear flag after bear flag, and now let's see what we've got in terms of wanting to look for some areas of exhaustion. Notice this death cross on the weekly, how good of a sell signal that provides. Price has just dumped since then, and you betcha I was all over up in there. So that is just looking beautiful. And I want to look at the SAR just to get an idea for, I really not have, oh, of course. Of course, okay. Hold on for a second. Okay, so this is what I want to look for, is just to see how close the SARs are getting to the price. When I'm deep into profit, I really like using the SARs as a hard stop, at least for a portion of my position. Because if this does break, that's a very significant indicator to me. As long as it holds as resistance, I want in all of this position. But if that does break, we could see a sharp reaction to the upside. So the closer these SARs get to the price, the more likely I am to use them as a hard stop loss. Thinking about it now, I'm probably going to go ahead and enter those orders this evening, because right here is an area where I would not really want to be holding through and watching too much profit disappear beyond that. That being said, I still do see a lot of room for this to go. Still am expecting 0.008 as my target, but there could be many counter trend corrections before that happens, or that could never happen. I mean, we all know how that works. Okay, so we covered that. Just one more fun chart to take a look at. People that have been following me for a little while know that I was tracking and trading the Turkish Lira very closely because it was just fitting into an ideal. I'm just moving this over here. Screw it. It's a pain in the neck. So that was turning into an ideal hyperwave setup where we've got these accelerating trend lines that are just, I mean, perfect. And what you want to see is price staying close to these trend lines. So this was real nice. This got a little funky. It got so far away from the trend line that you really didn't know, was this phase 4, 5, 6, and 7? Or was this just getting overextended from phase 3? So I was buying back in here. I actually did really well on this. I was shorting up in here, calling this phase 5, buying this trend line right here. This lower high is just really one of the easiest parts of a hyperwave for me to recognize when you just get this huge, massive 90-degree angle, sharp spike down, lower high. This was an ideal short setup for me that I was all over. And have been bragging a lot lately. Some positions, I guess, have been going good. You guys know me. I won't hesitate to let you know when I'm underwater and hurting. Right now, I'm about even on the Bitcoin shorts and not hurting, but am wanting that thing to freaking move. So here, I quit following this week right here. I viewed it as looked like this phase 3 had broken down. I still wasn't sure. Maybe this still is phase 7. It's just kind of funky. So really unsure how to view it after this phase line broke down. I ended up not doing nearly as well as I had hoped on this long position. I was really at a min expecting a return to all-time highs and was betting very big. So I was definitely kind of disappointed. But the reason I'm pulling up this chart is look at this action that we got yesterday. Just absolutely insane. Like this, I'd made a tweet yesterday that this is not a shitcoin. This is a world currency. I've never seen it. Have you guys seen anything like this? We're looking at a 1-hour chart. We can probably even zoom in. Let's go 15 minutes. This is a Turkish lira from 579 to, let's just get percentages. That'll make a clearer picture. So we're talking about in the matter of 45 minutes, this thing gained and lost 8.82%. There is something going on in Turkey. I don't know what, but this is so uncommon to any sort of normal market that I think it's something to just pay attention to, just from, even if I'm not going to be trading it, which I am kind of interested in. This sure makes it look like the price is ready to, shoot back up to the upside. But even if I'm not trading, I am very interested in just tracking this to see if this country is going to be, really entering hyperinflation, to see if the rules of hyperwave, see how they do. There's just I have fun following charts, and this is one of them. So that is pretty much what I wanted to go over. Seeing that there is not US-based BitMEX, there may be workarounds for that. Let's see if we've got anything else. We've got, do you share Tyler Jenks' famous prediction that Bitcoin is in a hyperwave with potential 1,000 target? I absolutely did. As we were pulling back in the bear market below 6,500, I absolutely believed that we were going to 1,000. I am not afraid at all to admit it, and I had a number of reasons why I thought that. Hyperwave wasn't even the primary reason why I thought we were going to 1,000. There was at least 2 reasons above that for me, and I was obviously proven very wrong. And I think what you're more interested in is if I think it's possible now. Right now, I think it's very low probability. As long as we are above 6,500, I think new all-time highs are the highest likely option, like in the order of 80% or more, and that's just as confident as I could be. I would never be more confident than that. So as long as we're above 6,000 to 65, very, very confident that we're going to new all-time highs. If we break down 6,000, I won't hesitate to bring that target back on the table. There's no point in me thinking about it now because there's so much that has to happen before that target is back on the table, and I don't even want to think about it because I want to be buying huge from 6 to 75 if that comes. I don't want to be having second thoughts, which a lot of people will be having, which will cause them to go ahead and pass up on those buying opportunities. So before logging off, I did want to just give a shout out to Block TV. I have been a regular guest on their show, Trader's Take, which is Monday mornings, and it might be something that some of you guys like a little better because it's always kept to a half an hour, very short, very succinct. We don't go into a lot of depth. I just kind of try to provide, my point of view and that sort of thing. So if you're interested in that, go ahead and go give that a watch. Give Block TV a follow. Give them a like. I've enjoyed working with them so far. Same with Joe Saz. Don't forget to go ahead and follow him. It was like he smiled as soon as I did that. That was awesome. So all right, with all of that, I am very, very happy that the stream went well. Perhaps the solution will be workable moving forward. I definitely do want to stick with the live streams. I like interacting with the chat. There's often a lot of good questions and always like hearing the positive feedback. And thank you again to everybody who has taken the time to help me to get this figured out. And thank you to everybody else who reached out, who maybe I didn't need your help just yet, but if that offer's on the table, I might be coming back for it depending on how things play out. So thank everybody for tuning in. Thank you all for the kind words, the support, the help. We will plan on now doing regular live streams as long as this thing is up and running, and I will very much look forward to that. Plan on catching up with you later.